It's time for another update of the day's business news. Joined once again by Kate Moody. Kate, Greece back to the negotiating table this Friday. What are they going to be talking about?
Well, international creditors are heading back to Athens to start the sort of nuts and bolts process of securing this third bailout. Remember, the deal that was reached after marathon talks in Brussels last week was just an agreement to restart formal negotiations, not a deal to release money. Now, the creditors' return is quite symbolic. Since being elected, the Syriza government has tried to keep what used to be known as the Troika firmly away from their home turf. You can see one of the last meetings there that took place in Athens in January. The Eurozone does want to be on the ground so they can get a better idea of state finances and the pace of reforms. Now, 86 billion euros is going to be at stake. The Greek parliament has already approved measures related to pension and VAT reform. Now, the creditors will be focused on liberalizing the labor and product markets and privatizing state assets. Debt relief will not be directly on the table, although the IMF has said it won't take part in a bailout program unless comprehensive restructuring is involved. Several European governments, led by Germany, of course, fiercely oppose that, so there are still a lot of divisions among the creditors themselves. And there is, of course, a looming deadline. Athens owes 3.2 billion euros to the European Central Bank on August the 20th. If it doesn't make that payment, the ECB will be forced to cut off its support to the Greek banking system, and that adds some time pressure to the talks. EU officials say they're hoping to have a framework ready for approval by about the 11th of August.
We mentioned that, Kate. Another country with a looming debt deadline, Ukraine this time round.
Yeah, exactly. Kiev is supposed to pay $120 million in interest to private creditors this Friday. If it doesn't, that could trigger a default on a much larger debt pile, around $70 billion. The government has been struggling to convince its creditors to restructure their holdings as it tries to get a grasp on the struggling economy. Ukraine's GDP has contracted 23% since 2012 as the war with pro-Russian separatists in the east takes its toll. Talks with creditors have been deadlocked, and that puts Kiev's international aid in jeopardy. It has to cut its debt costs by $15 billion over the next 4 years as part of a $40 billion rescue plan from the International Monetary Fund.
Well, let's move on to the markets now, Kate. How are they faring this morning?
Well, the trading day is just getting going in Europe. We're seeing a slow start so far. The DAX and CAC 40 opening in negative territory. They're flat open for the London FTSE. The Athens Stock Exchange is still not been reopened. It's been 4 weeks now that it hasn't been trading. In Asia, we saw markets turning downwards, the Shanghai Composite losing earlier gains. We've been seeing a slump continue in the commodities market. Gold has been trading at its lowest level in 5 years this week. It's been recording losses for 10 straight days. That's a first in 2 decades. Let's turn to some of the day's other business headlines now. The International Monetary Fund has warned Japan that it must deepen its structural reforms in order to lift growth and stabilize the economy. The Prime Minister's plan, known as Abenomics, is based on monetary stimulus, flexible fiscal policy, and boosting growth potential. But the IMF says the reforms have only produced modest improvement in the long-term picture and that Abenomics should be reloaded. Amazon saw its shares jump 17% on Thursday after the online retailer announced a surprise second quarter profit. Revenue was up 20% to over $23 billion. Amazon doesn't usually turn a profit and attributed the success to its cloud computing service and long-term investments. And Starbucks has reported its highest ever quarterly revenue. The world's largest coffee chain said global sales increased 18% to nearly $5 billion between April and June. It also opened 431 new stores.
Well, from coffee to chocolate now, Kate, you got some statistics on who eats the most chocolate in the world, and I'm assuming it's not me.
It's not, although it could be me. I don't know. I'd fight you for it, I think, Hala. That dubious honor actually goes to the Swiss. The average resident in Switzerland eats 9.1 kilograms of chocolate per year. That's about 20 pounds of chocolate. Austria and Germany tie for second place with just 8 kilos per person. This is all according to a study by Euromonitor. Now, Americans only consume about 4.3 kilos each. That puts them in 20th place worldwide. But the overall American population buys about 18% of the world's chocolate confectionery by value. That's more than $18 billion worth. India, Venezuela, and China have all been singled out as the fastest growing chocolate markets. So that could be interesting for a little trip there.
It could indeed. Crikey, 9 kilos of chocolate. It's enough to make your eyes water. Thanks very much for that, Kate Moody.